This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news. The focus is turning to the first quarter of 2025 now, and the twists and turns the world's largest economy will deliver. It is probably no coincidence that post-election Warren Buffett is selling. But first, in the week ahead, we'll get data on our producer price inflation and an update on our population. Not to forget a full GDT auction on Wednesday, which should confirm the recent higher US dollar prices are extending. And remember, in a week from Wednesday, the RBNZ will review the OCR for the final time in 2025. This review has to hold them until February the 19th, 2025, so the look ahead will dominate. And we've had a 4% one-year swap rate essentially unchanged for 7 straight weeks now. The 90-day bank bill rate has been stable at 4.5% for 3 straight weeks. On one hand, OIS pricing sees a 50 basis points OCR cut coming. On the other, some short markets aren't flagging any change. Our longer rates have been rising in response to the expected Trump inflation. So our 1 to 5 swap curve is suddenly no longer inverted. And our 1 to 5 NZ government bond curve has also turned positive for the first time since 2022. It isn't known what the RBNZ thinks of the ending of inverted rate curves, although it is unlikely they will be disappointed. In Australia, expect their flash November PMI on Friday, but not much light is expected in that. This week will also deliver more US regional activity updates. China will review its official interest rate benchmarks. Japan will get some flash PMI data too, as well as its export data. And there will be a range of other rather meaningless European data out as well. And financial markets will continue digesting what Trump 2.0 will mean for them. They seem to have had a reality check on Friday. Coming inflation, sharp job losses, and a capture of the regulatory rules for a few of their favoured elite isn't a recipe for the current healthy American economy to continue. And in the US, it seems the Fed is in no hurry to cut interest rates. Quote, "The economy is not sending any signals that we need to be in a hurry to lower rates," Powell said on Friday in Dallas. "The strength we are currently seeing in the economy gives us the ability to approach our decisions carefully," he said. And New York Fed boss Williams essentially said the same thing. Retail sales in the US rose 4.6% in October from a year ago, following a 0.2% rise in September. Reported seasonally adjusted levels were less than these, though. Rising car sales, up 6.6%, were a large part of this gain. But US industrial production actually decreased 0.3% in the year to October. This is a volume-based survey. The Boeing strike got most of the blame for this and was expected in the data. In the New York region, the Empire State Factory survey surprised analysts with strong new order flows and rising optimism, far greater than expected. Factory activity rose sharply too. In Canada, they also released factory data, but it was for September, and the Boeing strike squished its data as well. But Canadian car sales rose 2.6% in volume and 5.7% in value in the same period. In an economy that faces slowly rising central bank interest rates, Japan reported third quarter GDP growth of just 0.9%, down from a 2.2% annualized rate in the prior quarter, which itself was revised down from the previous 2.9%. In China, average new house prices for new homes fell 5.9% in the year to October. That's this official data's largest drop in 9 years. But for the first time in a while, there were a few cities where they actually rose. For used house sale transactions, the October data change was down 8.8% from a year ago. Interim November data indicates sales volumes will be lower than October. Construction of housing is still deeply negative, even if marginally less so in October. And China reported slightly lower industrial production growth for October, but it was still good at 5.3% higher, even if this was less than the expected improvement from September. However, electricity production only rose 2.1% in October from a year ago, undercutting the veracity of the industrial production data. They reported better than expected retail sales growth 4.8% higher than a year ago, suggesting some of their stimulus moves are working. But much of this is the previously noted rise in car sales, which involved incentives. Aluminium prices surged on Friday after China said it would cancel export tax rebates on this and other commodities, raising the prospect that their heavy flow of subsidised export shipments abroad may fade quickly. Also falling were copper, zinc, and nickel to a 4-year low, and tin. Aussie mining shares tumbled too, its largest one-week fall in a year. Layoffs are underway and some mines are closing. None of this would be happening if the view was that the US economy will still be booming in 2025. The US Treasury 10-year yield is now just on 4.44% and up 2 basis points from Saturday, up 17 basis points in the past week. And the price of gold will start today at $2,562 an ounce, down another $4 from Saturday. But that is down $120 or 4.5% from a week ago. And oil prices are 50 US cents lower at $67 a barrel in the US, while the international Brent price is now just on $71 a barrel. These levels are about $2.50 lower than a week ago. And the Kiwi dollar starts today at 58.6 US cents and down 10 basis points from Saturday. A week ago it was at 59.7 US cents, so a full 1 cent drop since then. Against the Aussie, but it'll change at 90.8 Australian cents. Against the euro, we're unchanged at 55.6 euro cents. That all means our trade-weighted index starts today at just over 68.4 and down 10 basis points from Saturday, down 40 basis points in a week. And the Bitcoin price starts today at $90,296 and up 0.7% from Saturday. A week ago it was at $76,099, so a sharp 18% rise since then. Volatility of the past 24 hours, however, has been modest at just on plus or minus 1.1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.